Welcome to the course Introduction to the Cost Accounting. Now, in this course, we are starting today with the basic definition of the terms like costing, cost accounting, what are the advantages, what are the limitations, and what are the usability, who uses them, and what is the difference between the cost accounting and the financial accounting. So, let us start with the basic definition. So, what is the meaning and definition of costing? So, costing is a technique and process of ascertaining cost. Now, one thing we must understand here that for a business, what is the basic objective? What is the fundamental objective of a business? The fundamental objective of the business is creating value for its stakeholders, like creating value for the shareholders, creating value for the employees, creating value for the the suppliers. So, the stakeholders, when a business is operating, its basic objective, the fundamental objective is creating value. Now, this value can be created, right, in primarily two ways. So, how we can do that? First is we can try to increase the revenue. So, we can try to increase the sales and gaining more the higher market share, and as the market share will increase, the sales revenue will increase. So, gradually the profitability will increase, and we can expect the size of balance sheet will also increase, and when the size of balance sheet will increase, it will create value for the shareholders, what they desire from their investments. Now, there is a second way of it. Second way is that to reduce the cost. If the level of revenue, the level of market share remains same, still the value can be created by reducing the cost. Now, ironically, the increasing the revenue is it is more difficult compared to reducing the cost, because you can identify, in the case of cost, you can identify that which costs are necessary, which costs are important, and which costs are not so important, and accordingly you can take action, right. But for increasing revenue, most of the times you need to pump in new funds, right. So, generating new funds and negotiating the rates, that is the cost of capital, and then pumping new funds into the business to increase the revenue, that is sometimes it is difficult. So, one of the way of increasing the profitability of a company, if my top line is not increasing, is to reduce the cost. Now, the first step towards reducing when I am trying to reduce this cost, the first step is what? I must know what is the cost I am incurring, right. So, I can calculate the cost, right, product wise. Suppose if I have a company which produces 3 products, so I can try to estimate that what is the unit cost of each of the product. It can be on the basis of cost centers also. I can identify cost centers, and then I can try to estimate that what is the cost incurrence at each cost center. Like for example, in an automobile factory, the assembly line can be a cost center, the engine division can be a cost center, the paint division can be a cost center. So, I can, and in different cost center I can try to find out that what is the cost each cost center is incurring, and if there is any possibility to reduce the cost, to optimize the cost without compromising on the quality. Now, this thing, that estimation of cost, is often easier than done. The reason is that many of the costs are measurable in direct terms. I can directly calculate, but there are also some costs, some elements of costs which I cannot directly attribute to the cost center or the product or the cost function. So, costing is a technique costing is a technique and the process of ascertaining costs, right. Now, for this what we need to do is, we will see later on in the course, what we need to do is, we need to identify each element of the cost and then calculate each element of the cost differently, right, separately. So, we can calculate what is the material cost that is incurring for a product. If I am going for estimating the product cost, I can estimate what is the element of labor cost in that particular product. I can also estimate what is the element of overhead cost in the in the product cost. So, I can segregate the total cost into different elements, right, and then I can estimate that what is the cost per unit, right. So, in costing, one of the important part is, it is required for pricing also, later on we will discuss it, that we must know that what is the unit cost of it. So, if I am say estimating the cost of this mobile, so I should calculate, I should know what is the cost incurred for manufacturing this one unit of mobile. So, it is a technique and process of ascertaining cost. These techniques and processes we will discuss elaborately in the forthcoming sessions, right. Now, from costing, the another term is coming which is called cost accounting. So, what is cost accounting? Cost accounting is the branch of accounting detailing with the classification, recording, allocation, summarizing and reporting of current and prospective costs. So, cost accounting is a branch of accounting first, right, like financial accounting is a branch of accounting, cost accounting is also a branch of accounting, and what it does, it classifies, right. How it classifies? Say for example, variable cost and fixed cost, right, this is a kind of classification we can do. Recording, so it collects the cost data from the shop floor, maybe from the different different points where the cost is generating from different cost centers, and records it in a systematic manner. It makes allocation where the direct cost is not directly allocated, it uses apportionment, it follows the process of allocation of cost, then it summarizes and then it reports. Reports to whom? Reports to whom? Reports the people who are interested in understanding the cost. Usually in the case of cost accounting, it is not reported to the outsiders, unlike the financial accounting data, which is particularly prepared for reporting to external bodies, like for example income tax, okay, to the common shareholders and all. Cost accounting is primarily an internal practice. So, it is used by the management usually for two purposes. The first purpose is to take the managerial decision, right. So, what kind of managerial decision? It takes the managerial decision, for example, say what should be the price of a product. So, the company which manufactured this mobile, it has to take a decision about the pricing point, what should be the pricing. So, the pricing should include some amount of profit element in it. So, understand that what is the profit element in this mobile, it must know what is the cost of production of this mobile. So, the cost ascertainment, as far as accurate, right, is possible, that is very, very important, right. Then this is one aspect. The second aspect is that if we go for if we go for external data, right, if we go for external data, then it is primarily the financial accounting and not the cost accounting, right. Okay. Now, the second point is, what are the features, right. So, what are the features of cost accounting? So, I repeat again, what is the cost accounting? The costing is a process of ascertaining costs. The ascertaining cost is important, right. Why? Because of two reasons. One is for taking managerial decisions, and second, for putting a control for evaluating and controlling the managerial decisions. So, the company may have to take pricing decisions, right, of its products, for the make or buy decisions, for deciding on which product to outsource, which product to manufacture in-house. So, for this kind of decision making, it is important to have the cost data handy. So, for that purpose, the cost accounting plays a very crucial role, very helpful role for the management. What are the important features? The first feature is, it is a process of accounting of costs, right. Second is, it records income and expenditure relating to production of goods and services. It is concerned with the cost ascertainment and cost control. It provides data for preparation of estimates and quotations. Now, you see, some amount of cost accounting data, it is historic in nature. That is, we calculate the cost accounting data from our previous records, right, and we summarize them and put it in a statement. But it is also required for our future forecasting. So, suppose say for example, a construction firm, it wants to fill a tender for construction of a highway. Now, for that, for filing the quotation, right, for filling up the tender, he must have the appropriate cost data in place. Why? Because he has to ascertain that for quotation, that what would be the probable cost it would incur, right, for actually executing the project. So, he can calculate the cost, he can take the cost data from the previous records, cost records, and then add a profit percentage to it and arrive at the final figure at which he can fill the quote, right. So, the cost data can also be used for futuristic estimations. It establishes budgets and standards so that actual cost may be compared to find out variances. Now, again, for management control and evaluation, one needs to create the budgets, right. So, these are two popular tools for management control and valuation. The first one is that the companies need to create budgets, right. Budgets are usually futuristic in nature, right, but the fundamental data for creation of the budget, it comes from the historical records. If the company does not have the historical cost records in place, it is very difficult for the company to create a budget which will be effective. So, here also the importance of the cost accounting and the cost recording, it prevails. Then, based on the historical data, it creates a standard. Say, for example, say for manufacturing this mobile, the company estimated that the material cost, right, should be say 2000 rupees. That is the ideal, that is the standard, right. When actually it will be produced, then the company can record the actual cost and can compare with the standard. Now, if there is a variance, right, which mostly happens, if the actual material cost and the standard material cost, it does not match, right, it does not match, then the management can try to find out that why this anomaly is happening, why this difference is coming. So, it helps management in controlling the performance. This recording and existence of historical cost data and creation of standard cost, it helps the management to take right decision at the right point of time. So, these are the important features of the cost accounting. So, from costing, there is the study which comes, which we will will discuss in this course. It is called the cost accountancy. What is cost accountancy? Cost accountancy is the application of costing and cost accounting principles, methods and techniques to the art, science and practice of cost control and ascertainment of profitability. It includes the presentation of information derived there from for the purposes of managerial decision making. So, from costing, when we are recording the the cost records, right. We are performing the recording of the cost records. Then this costing and cost accounting principles, right, the methods and techniques, right, when we will apply for cost control and ascertainment of the profitability, that study, right, that subject of study is called the cost accountancy. One thing important here is it is a technique to the art science. It is an art as well as science both. As I said, that in most of the cases, costs are directly attributable, right. In many of the cases, it may not be directly attributable. So, there we need to use judgment, we need to use the subjective judgment. So, when we are using subjective judgment to ascertain the cost, so it becomes an art. I am giving you one example, say this mobile, right. I can ascertain that how much material is used for manufacturing this mobile. I can directly attribute it here, right. I can directly attribute it here, and when I am attributing it, right, I may find when I am recording the costs for this mobile, I may find that there are some costs which are not directly attributable. Like for example, in this company, 50 accountants work who maintain the cost records. Now, the salary paid to this accountant, how I will attribute to a single model, because this company manufactures 10 different models and these accountants records the cost data for all the 10 models. So, when I am trying to ascertain what is the cost per unit of this particular mobile model, how I will allocate the salaries paid to the accountants, right, to this single unit of mobile of this model. So, there I have to use some assumptions, some judgment, some basis for it, which may not be as direct, right, as we are attributing the direct material cost. So, we need to use our own judgment. So, when the judgment is being used, it becomes an art. So, it depends on the person who is calculating the cost, right. So, in that sense, it is an art as well as science, and it includes the presentation of information derived there for the purposes of managerial decision making. As I said earlier, that unlike the financial accounting, right, cost accounting is primarily used for internal consumption. It is not for reporting to common people in general or the investors in general. So, the primary use of cost accountancy, the cost accounting data is for the internal consumption and for managerial decision making. In the forthcoming sections, what we will see is we will discuss certain tools, right, which can be used for decision making purposes. Particularly, that part of study is often called the management accounting or management accountancy. There the managers use the cost data for the prudent managerial decision, right. So, that is an important use of cost accountancy, and that is the very useful thing. And another way the managers use the cost data, that is for performance evaluation and control. Once the decision is being taken, I need to continuously monitor that the decisions which I have taken, whether those decisions are bearing results or not, right, because I may need to change then. So, whether it is becoming fruitful or not, whether it is actually meeting its objective or not, that we do through management control tools. So, in this course later on we will discuss two management control tools. One is called budgeting and second one is called the standard costing. So, what is the objective of cost accounting? So, objective of cost accounting is, first is of course ascertainment of cost. So, this ascertainment of cost usually it is done in under a basic structure. So, under a basic structure the costs are usually divided into two categories. One is called the direct costs and second one is called the indirect costs. What are the direct costs? Direct costs are the costs which are directly attributable to the final product. As I gave an example already, I am again just for a recapitulation I am saying this is a mobile and this mobile uses material, right. The body of this mobile is made of fiber, right, polypropylene fiber. Now, this polypropylene fiber, this is material cost, material which is used for manufacturing this mobile. Now, how much is the cost of that polypropylene granule or material which is used for manufacturing this 1 unit of mobile, that I can calculate, right. And that calculation is not very difficult also. I can simply calculate that how much material is being used this, I can say this is the material cost. Similarly, I can estimate that what is the labor cost that is incurred for manufacturing this mobile. So, I can calculate the total number of laborers employed, what are their salaries, how much bonuses they got, what is the cost to the company, and then I can come to the value that this is the cost of direct labor, which I can directly attribute here, right. Direct labor is one who is directly worked. Suppose this is this is manufactured in a assembly line particularly dedicated to this model. So, the workers who are working on that particular this assembly line, I can take their salaries and wages as the direct labor cost. The problem arises when the cost is not directly attributable. Say I am giving few examples, right. So, say there is an accountant in the factory who keeps all the records of this production units, this mobiles, right, and the company produces 10 different models of mobile. So, how I will allocate his salary to this single unit of mobile? So, I can't do that, right. So, this is an example of indirect expense, right. Suppose the salary paid to the CFO. Now, the CFO, he is responsible for all the products for say for the CFO, right. So, the CFO is responsible for all the products which are produced in a company, right, all the costs. Now, when I am trying to estimate that what is the cost of this particular mobile unit, it is I need to do the allocation on the basis of on the basis of some I have to do it on some basis of allocation. So, this type of expenses, indirect expenses which we cannot directly attribute, right, they are called overheads. In common term, they are called overheads. So, for ascertainment of the cost, I need to estimate the material cost, I need to estimate the labor cost, I need to estimate the overhead cost, right. I can look at it in another way, like for example, if I further break down, the direct material can be of the material can be of two types, direct material and indirect material. So, I can write like this. So, when I am ascertaining the cost, we will discuss all these things in detail in forthcoming sessions. So, I can do it like this. So, for ascertainment of cost, the number 1 I can do, I can ascertain the material cost, right. Number 2, I can do labor cost, and third I can do is called overhead cost, overhead, or I can say it is indirect cost. Fine. Now, when I am doing this, right, uh, material cost I can further divide into two parts. I can say there is direct material and indirect material. Similarly, labor cost can be direct labor and indirect labor, right? And all the indirect costs I can simply add up here in the overheads. Fine. So, I can classify the cost elements under these categories, right. Now, once I will decide, right, once I will record all the cost elements, the second element which is important is the cost control and cost reduction. As I said that the basic objective of a company is to propagation in value, right, creation of value for its stakeholders, right. This is the one of the major objective. Now, for achieving this objective, one thing they have to do continuously, that to eliminate the waste, right. So, they will eliminate the waste, the cost will come down, right, and there should be always, there is a need to keep a tab on the cost control, right. So, how I will be able to do the cost control or even reduce the cost in the difficult times if I do not know that what is my cost, right. So, from that sense, it is very important to have the cost records. And as I said earlier, if I compare the increasing the value by increasing the sales and reducing the cost, I can increase the value by either increasing the revenue or reducing the cost. Out of these two options, reducing the cost is easier in the shorter term, right, rather than increasing the revenue. Increasing the revenue takes time, and increasing the revenue many a times it requires additional funding, right. So, it is not very easy in the short term particularly to increase the revenue. Revenue increase takes a longer time frame, but reduction of cost can be done at a very short period of time. So, in recession times, many a times what happens that the companies issue notices for cost reduction, like for example, they say that okay, still now the all executives were traveling in first class. Now, from now on, because of tight economic situation, all travel will happen in the economic class. If required, if possible, you complete the work through online meetings, right, rather than try to avoid the physical meeting through travels and all. So, these things are possible, right, for cost reduction, but revenue increase in the short term time frame, it is sometimes may not be easy. Determination of selling price, this is a very important objective. Companies need to determine the selling price. So, determination of selling price is a little tricky affair, right, in the sense that first of all, in the longer term, right, I can't sustain if my selling price is lower than the cost price. In the short run, the company will not be able to sustain if the selling price is lower than the cost price. So, I must sell my product in the longer term, right, at a price which is higher than the cost price itself. So, for doing that, I must have the cost data, right? Cost data, and it should be, more or less accurate, right? It should reflect the true cost, right? This is one objective. There is a second aspect of it. Second aspect is, if my selling price is more than my competitor's price, right, then it will be difficult for me to gain market share, right. So, I need to keep an eye on that, what my competitor is doing. If my competitor is selling this mobile at 20,000, and if I try to sell the same model with the same features with 25,000, then I need to justify why I am doing it. Otherwise, customers will not come to buy this, right. Uh, and otherwise, right, if I sell it at a lower price, right, sometimes it happens the companies sell at a lower price, which is called penetration pricing, to enter into the market, right. But that can only be a short run provision. We cannot sustain the penetration pricing for a longer term, right. So, when I am doing penetration pricing, that means I am selling at a price which is lower than the cost price or almost matching the cost price. So, my objective is to gain market share at a shorter period of time, right. That can be a strategy. Companies use this kind of strategy, but I must know that I am doing it, right. And I must have the strategy also to how I will recover this loss later on, right, how I will recover this loss in the longer term. So, for determination of the right selling price and creating pricing strategies, the companies must know the cost price as far as accurate as possible, right. So, in that sense, the cost accounting plays a very, very crucial role, right. So, till now we were talking about the product wise, costing, but we can also calculate the cost activity wise, right. So, how much cost the company is incurring for each activity and how much profit. So, if the cost is known, you can also see that how much profit each activity is generating, right. And when we are doing so, ultimate objective is to assess the management in decision making. The more the management becomes knowledgeable, right, it will have the knowledge about the cost records, it will be easier for the management to take the decisions. Okay, right.